get clean, consistent financials so you can make business decisions and planning decisions. And work with a professional that is proactive, one that's on your team, and one that is looking to be a partner with you, right? Like walk alongside you in the journey. So find great financial professionals that are willing to do that.
Hey everyone, put down your bags and relax and welcome to the Room Key, where depreciation is fun as long as it's on your tax returns. Today we're talking money. My guest, Paden Squires, a CPA and CFP who's built his career helping business owners not just keep track of their books, but actually use those numbers to create wealth. He's also the host of Behind Their Success, a podcast for and by entrepreneurs. We're diving into the financial playbook every hotel owner should know, from budgeting and debt to cost segregation and the return of 100% bonus depreciation. If you've ever wished you could corner a CPA and ask all the questions you didn't want to pay for, this episode is for you. Paden, thank you for joining. I really appreciate it.
Absolutely, Chase. Thanks for having me on your awesome show here.
Yeah, absolutely. I want to go way back. Where did you grow up, Paden?
Yeah, where I grew up. So I grew up from a tiny little town called Glasgow, Missouri. It's a town of about 1,000 people, right on the Missouri River. So right in kind of central Missouri. Very, very rural. Like I said, I think my whole county probably had 10,000 people in it, in the entire county. And
Nice.
so I grew up very rural, central Missouri, not around. I think the biggest city we had closest to us was Columbia, Missouri, which is a pretty good size, university town, where the University of Missouri's at. But yeah, I grew up very very rural in Missouri.
Do you stick around there for college?
Yeah, yeah. So like I said, my little town, I kind of grew up in, had a bit of an interesting childhood. I grew up in a single mom house. Father kind of in and out of the picture a little bit. So we had some struggles and stuff growing up. Not anything too wild, but I would say some financial insecurity as a kid, and that really what drove me into kind of the industries and stuff that I ultimately went into. As a kid, I just kind of had the fear of running out of money and being poor and whatnot, and
Yeah.
that really motivated me to get into the world of money and learn how money works because I didn't want that feeling anymore. But ultimately, yeah. So I graduated high school from a tiny little Glasgow high school, the Yellow Jackets. Great boys basketball program there, by the way. And ended up going to Columbia College, which is a small private liberal arts school right there in Columbia. So in Columbia, you have the University of Missouri, which is ginormous organization, and I
Yep.
actually went to the small kind of liberal arts private school there called Columbia College, which is actually they're massive. They're actually one of the bigger players online and have been from the beginning. Columbia College.
Okay. Very nice. So stuck around. You're a Missourian. Is
Yeah,
that what you say?
yeah,
Missouri. Okay.
yeah,
Nice.
Missouri. Yeah, so we went. I went through college there. I got my undergrad there in finance and accounting. I came out of school around '09 area, and of course, going into finance in 2008, 2009, like everybody in finance was getting fired and laid off. That was coming out of the real estate, the massive recession and that time.
Yes.
I was working for a local bank, didn't really have any great prospects. So I was like, you know what? I'm going to go get a master's degree. So that's what I did. I went on and got my MBA, online and at night while I was kind of working. I ended up leaving that banking job, ended up working for kind of a Fortune 500 company in their finance department, doing a lot of cost accounting in a manufacturing environment. Um, Quickly learned out like employee, being an employee is not for me. Like I'm really good. Like my bosses would tell me, oh yeah, Peyton was a great employee, but like I hated it. It was not what I wanted to do. I'm not great at like
Yeah.
people telling me what I need to do all day long. So that it's just not for me. So while I was in that last job, this was like I don't know, call it 2013. I was working in a job. I spent that whole year I was there, studying for the CPA exam and passing all the CPA exams. So I kind of made a plan while I was there to pass all the CPA exams. There's like 4 exams there, and it takes some time.
Yeah.
And then I quit and started my own CPA firm, kind of right out of that job. Had zero public accounting experience. Maybe not recommended for people to do that, but that's what I did. So I quit my job, opened up my own tax firm in my living room, in my tiny house in Fayette, Missouri, and have grown it into what it is today. Fast forward 11 years, and we got a whole team and do tax
Yeah.
planning at a very high level, and yeah, really enjoy it.
Yeah. And you work with a lot of different industries. And I think that's a huge value to everybody that you work with, because your perspective isn't just narrowed into, pigeonholed into a certain industry. You have the experience of working with folks in a lot of different areas, different skill sets, and different ideas come into play as you start to branch
Yeah,
out and have a lot more experience.
yeah, and I think that. Yeah, that's a great point, Chase. Yeah, I mean, while we're not like industry specific, like you say there. I've worked with, I mean, well over 1,000 entrepreneurs in my career, and yeah, vast experience across different industries. There are certain industries that we can certainly add even more value because there's a whole lot more tax planning opportunities in it, like real estate. And well, I know what really separates us and my team is that we're entrepreneurs too, right? Like we know the
Yeah.
entrepreneur game, we speak the language, we understand what entrepreneurs are going through because like I live it every single day. And so it's really easy for us to relate to entrepreneurs, to consult with entrepreneurs. And while, yes, we're very much focused on the finance and taxes, we do a lot of general business consulting as well, where I'm just like, hey,
Yes.
you ever thought about doing some marketing like this or like that? So, I mean, there's a lot of general business advice that comes along with working with us too, just from our, vast experience.
Yeah. Yep. Absolutely. And Paden, you wear two hats, the CPA and the CFP. Give us the 10,000-foot overview of the difference between the two and how they play into your business.
Yeah, yeah. So I've been a CPA since 2014. So a CPA is, that's really you call it a tax designation, right? So that's your
Yeah.
accounting profession. And I've been a long time, right? My experience is very, very in depth with tax for over a decade. In the last couple of years, I did add the CFP certification as well, right? So that's a certified financial planner. I do some wealth management stuff as well with clients just because well they ask me to, and it fits in well with the tax planning and stuff we do as well. So it's something we've really mixed in and helping helping people not only on the tax side but really helping them grow their net worth and do some asset management stuff as well. So yeah, it's a great certification. We do some asset management and wealth planning because the taxes and wealth planning. I mean, it all goes hand in hand. So yeah, we do a little bit of both there.
Absolutely. Just jumping in right into things. When you think about specifically talking to hotel owners, because that's really where our bread and butter is, that's where our audience is here.
Yeah.
Why do you think financial planning is often a missing piece in their toolkit?
Yeah, well, I think it comes back to people don't know what they don't know, right? And that's true of everybody. And when I'm coming in and working with entrepreneurs, it's I don't expect you to know any of this stuff. You know what I mean? Like
Yeah.
and that's it's my team and my job to go learn all this specialty knowledge and bring it to you and bring value to you. A lot of entrepreneurs, I'd say most entrepreneurs struggle financially, and a lot of it is well, they just don't have any training on it. They don't have any knowledge on it. They don't, once again, don't know what they don't know. And it's just kind of this scary thing. Like, no entrepreneur like probably loved accounting in college or high school or whatever, right?
Right.
Because entrepreneurs are usually high driving personalities. They're not these detail oriented type of people that generally are in the accounting money space, right?
Yeah.
It is extremely important because taxes are probably the largest expense you're going to have in your life over your lifetime. That your income
Yeah.
tax bill is one of the largest expenses you're going to have over your whole life. And the ability to come in, restructure, be super strategic about income and when you recognize income and different tax strategies like cost segregations and timing all those things out. There's a lot of efficiencies you can gain um, and grow your net worth much quicker because you don't have the drag of taxes on that, right? Like let's say you make $100,000, and of course you got to go pay a $25,000 tax bill. Well, then you only have 75 grand left over, right, to then
Yeah.
reinvest. But if you can get really strategic about it, and it's okay, well, I made $100,000, but from some way or another, I got strategic about it and don't have to pay taxes on it. Well, now I still have $100,000 to reinvest, right? And you do that on a large scale where you're not having to take money out of the pot to pay taxes. It allows you to compound things, just a whole lot faster.
Yeah, and we'll definitely get into different pieces of that, but there are certain incentives that the government puts in place that they want you to invest in these certain things if that works for your business. Of course, never, let the tax tail wag the dog, right? But if it works with your business, it makes so much sense to look at what those are and really make the best strategic decision long term.
Yeah, yeah, absolutely. And I have that conversation with my clients or potential clients I'm talking to all the time, where it's like, we're not spending money just for a tax deduction because like what you're not spending a dollar to save 30 cents. Like, how does that make sense, right? Like now, if it's a
Yes, yes,
good use of money for your business, that's like, okay, it's in a good expense, it's a good investment because we're going to get a return on it. Yeah, then the tax benefits are just kind of like icing on the cake, right? But yeah, never buy something for the tax benefits alone, right?
right,
It's
right.
it's got to make sense in your whole business model.
Yeah. And on that route, if you start working with, say, a small hotel owner, somebody
Mhm.
that owns one or a handful of properties, what would you say maybe some of the most common financial mistakes that you see on their books?
Accounting's a mess. I mean, yeah, I mean, just financial mistakes on their books. I mean, typically, I don't say typically, but yeah, I mean, it's not surprising. I mean, I see multi-million dollar revenue businesses all the time that have terrible financials, or
Yeah,
or you have your office manager or somebody running the books, and they know how to do 80% of it, but like that 20% is crucial, and so I think it's just lack of professionalism around the financials in general, and it's not like you need some amazing professional to be involved in that. With technology and stuff, a lot of it can be done, done automatically, but
yeah,
it's just the total there's not a whole lot of understanding out there of business owners exactly how accounting works, and having clean books, timely books that, okay, you didn't get an income statement, we're recording this in mid-September, some people just got their like, their end of July profit and loss statement from their accountant, and we're 45 days past that. It's like, well, what good is that even at this point?
yeah,
You need
yeah,
timely things, and it's like this is both good for taxes, right? Because a person like me can come in and really help you strategize it because I have real data, real numbers. Sometimes I come into situations like, guys, I can't do anything here because I don't even know what is going on, because it's
right.
bad, right? So it's really just having a clean set of financials because it's going to help you not only with tax planning and tax strategizing, but it's also going to maybe more importantly help you with business strategizing and business decisions, right?
Yes, yeah, absolutely. I don't know about you. In high school, I was always pretty good at math. I really loved math. Can't say that I really cared for my math teachers. Uh, Probably would have gone a lot further in the math side if I had teachers that I liked. But I was one that always got excited for what's next and what
Yeah.
can I do, and I was one. I'm not math genius by any means, anywhere close to that, but I had the mindset where I could go two, three, four steps ahead,
Mhm.
not show the math, right? Show how all of the processes, and of course, all the teachers hated that.
Yeah.
But that also led to mistakes, right? If you get too far down the road and you don't know exactly how you got there. Even if you're in the right spot, that can lead to problems. And I'm not innocent at all in what you're saying right now as far as having good, clean
Yeah,
books all the
yeah,
time, because I'm looking way down the road, way into the future. Like, what's next? What's not?
yeah,
I'm not worried about what's on the books right now. I'm worried about what's on the books next quarter,
yeah.
which can lead to a lot of problems.
Well, yeah. I mean, it's just if you're not, we as entrepreneurs, we all need to take time to reflect, right, or reflect
Yeah,
over, the last quarter, the last month, whatever that rhythm is. Because yeah, if we're always just living in the future and not reflecting, which is good to be living in the future, right, or dreaming into the future, right?
yeah,
But if you're not reflecting, like you're not course correcting, right? Like you said, right? It's going back. Okay,
yes,
like let's do an eval on this. What went well? What went bad? What's areas we can improve? And there's always areas you can improve. So obviously that's super key. Otherwise, you're gonna, like you said, just keep running down some road, and that may or may not be where you want to be.
yeah. Well, I've done that before. Obviously, I know my own area. Or if I'm back in a town that I lived in for a while, and I think I know where I'm going. I don't plug it into my GPS and start heading down, and then it starts to get a little hazy, a little gray. Maybe my memory isn't quite what I remember. I pull up the maps, and it's like, oh yeah, well, I went a few miles in the wrong direction.
Yeah, yeah. So that's really interesting. A really interesting concept. Have you heard of like the Kruger-Dunning effect? It's like a
Yeah,
scientific thing. Anyway, but like it's really interesting how humans, like, so okay, let's say you know nothing about a topic. Well, then you know nothing about a topic. But it's interesting when humans dive into a topic, they start to learn a little bit about it, and their confidence shoots way up, right? And they in
yes,
reality they only know like 2% about a topic, right? But they get super confident about it, and that is like the most dangerous place to be because you
yeah,
don't know what you don't know, and you're super confident, right? And usually that's when people make massive mistakes.
right,
But usually pretty quickly, like your confidence shoots way up. Say like you're starting a new business, right? You jump into a new business, you're all excited because your buddy just made a bunch of money in real estate, right? So you jump in and you learn a little bit, and you get really confident, and then all of a sudden reality sets in. You start to learn what you don't know, and then
yes,
that confidence goes way down, right? We call that like the valley of despair, and that's where everybody quits, right? In business, they get super
exactly.
confident. Holy crap, this is way harder than I thought, and they quit. But it's the people that get down in that valley and keep trudging forward. They are ultimately the ones that get successful. But it is really interesting how people get really confident about things that they know in reality very little about.
Yeah. If you could wave a wand and fix one thing about how your clients run their numbers, what would it be?
If I had a clean set of accounting for every tax return I had to do, my job would be so much easier because half my time is literally trying to figure out what is happening in the books so I can report it properly. So if I could wave a magic wand, it would be everybody would have clean books. It would be that everybody took planning as serious as I do. And the reason I say that is because we have clients. We have clients that we try to help, and the interesting thing when we bring on a new tax planning client, like we have a kickoff call, and we have very much an expectation setting call. I mean, that's really the whole point. It's where it's guys, we can't do our job if you don't help us, right? Like we can't do our job without information. And
Yes.
so it's like we need your participation. It's like we made all these promises of things we can do for you, but we really can if you don't participate. And so it's that kind of thing. So it's really it's all my clients would be totally aware and react to knowing that how important this could be for their financial situation, and they would immediately respond and do what I want them to do. Like a wave magic but and I understand that's not reality. I mean, we're all messy humans, and we
Sure.
all have all my clients have so many competing priorities, and I get all that. And,
Yes.
and we try to take the stance of like we're we're going to be proactive. Like we're going to be reaching out to you all the time. And it's like, you get on this meeting so we can talk about this stuff and that kind of stuff. So
Right.
we're really, we understand humans, right? But and we do everything we can to try to get them to, these crazy entrepreneurs to set still long enough so we can help
Yeah.
them.
Yeah, absolutely. Hotels are a little bit unique. They're obviously very cash hungry businesses. The
Yeah.
payroll, the PIP, debt service taxes, all that. What's your approach to helping owners budget so that they're never caught flat footed?
Yeah, I mean, it's just a matter of having a budget. I mean, you'd be surprised how few people actually do. It's a matter of
Right.
having a budget and being realistic. And me as a CPA or more of a conservative type person, it's like building those budgets and then also building those budgets with like buffers in them, right? I try to
Yeah.
build a conservative budget of like, okay, here's if things went, pretty bad or like, not ideal, right?
Hmm.
And building in buffers in that to where it's like, okay, this is like our break even, and it's just build some conservativeness in it, right? That like even if things went bad, it might still, you know what I mean, you might still be okay.
Yeah.
So it's a matter of just actually having a budget, having I'd be surprised how many business owners and maybe even some of the listeners here that they don't have financials other than trying to put some together to file their tax return. And that's to me is the worst place to be because, like you said, hotel owners. I mean, you're running a business inside of a piece of real estate. Like it's a full blown
Yeah.
business. Each individual hotel is like its own contained business. And if you're flying by the seat of your pants with no budget, and no like just kind of cash flow needs analysis of like how much cash do I need next month, you're going to run into problems at some point where you're like, oh man, we may even be making money, but I don't have any cash and I can't pay the bills, right?
Yes. Yeah. And every hotel owner knows the importance of the seasonality of this
Yeah,
industry.
yeah. Hmm.
And each hotel is going to be very unique. Each
Depending on the
geography is going to be
location and
unique.
yeah, what they're doing and who
Yeah.
they're serving. Yeah.
Yes, but budgeting, knowing that if you're in the good time, if you're in summer in Florida, things are rocking. But as things cool down, if you're not planning for those times, then it can get tough quick.
Oh yeah, for sure.
A lot of hotelers blend personal business and finances. Obviously, a big issue across a lot of businesses. But how should an owner think about separating their personal wealth plan from the day to day running of their property?
It needs to be separate, and here's why I say, I mean, it needs to be separate for a lot of reasons. One major reason is the business needs to stand on its own. It needs to stand on its own. It needs to produce its own income, and if like you're an employee in that business, you should get a W-2 just like you would pay somebody else to do whatever jobs you're doing, right?
Yeah.
And the reason I say all that is because then you build the business model around those costs. You know what I mean? Like if you're just the hotel owner, you're working in it every day, you're not taking any pay, or you're just kind of like paying personal stuff out of your business account, like we don't know that this business model actually works without you involved in it or your free labor involved in it, right?
Yes.
And truly, like you need to build a business that you can be replaced, right? Or you could just hire somebody that replaced you. I think why some of that happens is because people they haven't built the business model around actually paying themselves, and they do that often. And there's different programs like Profit First is one that you may have
Yeah.
heard of that I don't use it and don't necessarily tell people to use it, but the thought process of building in owner W-2 and owner distributions and all those things, you need to build that in the model because if you're building a business that can't pay you, like what are you building
Right.
and
Right.
why? you know,
Yeah.
yeah.
Yeah. And there's some tax benefits along those lines as well, right?
Yeah, well,
Um,
and when you get a lot of that stuff figured out, you get a lot of your cash flow kind of figured out, then yeah, you can start to get really strategic about it, and especially if
yeah.
you're making some profits. I mean, people that are full time in the real estate world, there's a lot of options for them. I mean, the tax code, the U.S.
Yeah.
tax code gives a lot of options and flexibility for people that are real estate professionals. That's for sure.
Yeah, absolutely. And we have a lot inside the hotel industry. We have a lot of owners that still live in the property themselves and
Hmm.
operate. And being able to sell, naturally, being a broker, I'm having a lot of conversations on the acquisitions and the disposition side. So if somebody's looking forward to a potential sale, whether it's in a couple months or a couple years, that's one of the things that we always go through is if you're living in the property, that's great. It's obviously had a lot of benefits for you long term, but how do we position this thing right in order for the best sale?
Yeah,
Because what's on the books is what the buyers are going to see. How do we tell the right
tell the
story?
story. Yeah,
Yes. And it's always easier when you're right. You have the clean books, you have the tax returns that show that that's all separate. It's a
yeah.
lot less work on my end, but it's a lot less work for the buyer to actually
Well,
see
yeah,
what's
yeah.
going
But
on with the property.
it's a lot easier for the buyer to actually see the value they're buying, right? And
Exactly.
and, and I see this a lot in all kinds of different industries where somebody wants to sell their business, right? And maybe I'm working with my client, like evaluating the business, right?
Yeah.
And you know, we'll get a nice story from a broker or whoever, or maybe just the owner themselves of like how this thing cash flows and what all that stuff is. I'm like, great, give me the tax return, let me see it. And
Yes.
they're like, well, that stuff's not on, that's not on the tax return. I'm like, well, you can't have it both ways, right? Like you can't say all this stuff
Exactly.
actually happens in reality and then have no documentation of it. Even it's like,
Yeah.
how can I trust or believe that, right? So it's,
Yeah.
and I understand in the business world, like stuff goes to cash and whatever, yada yada. I close my ears, don't want to hear any of that stuff. But it's you can't not show income and then expect people to actually pay for that income. When they're buying your business, right?
Exactly.
And
Yeah.
so when anybody that's looking to go down that road of selling or disposing of some of your hotels or whatnot, like it's just it's working with somebody like Chase and also just getting a tax plan around what that is. Because, if you're talking, millions of dollars or whatever, right? Having a little plan coming into that of, okay, what, you close on this deal, what are you doing with the money? Are there things you can reinvest it in, like maybe through a 1031 or even other types of tax advantage things that can limit, ultimately the tax bill out of that, so you can, hang on to more of your money and create more cash flow and whatever ultimately you invest that money back into.
Yep. Yep. And I imagine I always like to have the conversation with my clients or my potential clients as early as possible. I would imagine that's very similar to you. I can't do my job well unless I can help you, and
We're
sometimes
selling
it
this
just
tomorrow,
takes
right?
a lot. Right. Right.
Yeah,
It
yeah,
just
it's the
takes some
same
time
thing.
to get everything in the right position.
It's funny. Sometimes I'll even have, yeah, and we tell our clients that all the time. It's like, and that's part of that expectation call where it's like, hey, we're not here to babysit you. We're not here to tell you what to do. We don't want to tell you what to do, but like, don't do big things and not like ask us if we have any concerns, right? Like not, and like once again, we're not going to tell you what to do, but like we have perspectives that you don't have, and it's just there's so many times in the last decade of
Yeah.
my career where a client's gone and done something, and I'm like, geez, I wish you would have talked to me first because we
Yes.
this and it would have been way better. So it's just yeah, make sure you're talking to people. You have line of sight of a plan because that's obviously for hotel owners, you selling this massive asset. That's like it's a big deal. You know what I mean, and
Yeah.
it can have a big effect on ultimately how things turn out for you.
Yep. Absolutely. Diving into like entity structure, LLC partnerships, S corps, owning in your own name. We still see that a lot in real estate in general and hotels.
Yeah.
Uh, talk briefly on sort of the benefits, the differences of owning inside an entity versus owning yourself, the different types of entities.
There's a lot of different ways to structure things, depending on your business model. If you're actively running a hotel, it's just like any other type of business. having those operations in inside of like an S corp could certainly help you save a little bit of money on Social Security and Medicare taxes and self employment taxes if if your hotel operations are profitable. So there's things to look at there. Some of the other implications, like generally putting real estate inside S corps are generally not a great idea. It causes some
Yeah.
tax issues, and especially too, this is not necessarily hotel operators, but because theirs is like an active business they're operating in. But I'm just talking about like rentals and whatnot. S corps are not needed, nor should almost ever should just like long term rentals and stuff be inside S corps. It creates issues, and rental income isn't subject to Social Security and Medicare like self employment tax
Right.
anyway, and that's kind of the main reason of having an S corp is to avoid that, which you don't even need it when it comes to rentals. But
Yeah.
that's not really the case for hotel owners. You're running why, yes, you're collecting rent, nightly rents or whatever, but it's a business operation. So um, having an S corp could be a good model for them. Um, a lot of the different structures when it comes to all this stuff don't necessarily have as many tax implications as they do like legal implications, right? And I'm certainly not an attorney.
Yes.
Um, you know, generally it's a good idea to have things separated, just to have walls in between things in case there's any legal issues. But from a tax perspective, I mean, ultimately, like generally with these smallish, hotel owners, right, or owner operators, all this income is going to show up and pass through to you personally, right, on your personal tax return, whether it's in a partnership or an S corp or
Yeah.
however you have it. So it ultimately ends up being personal income. So you really, you know, you come to doing tax planning and monitoring all that stuff, through a personal lens eventually.
Yeah, absolutely. And this is more so again on the asset protection side, but separating out the business and the real estate itself. We
Yeah,
see that a good
that's
amount
that's
inside the
that's
hotels.
generally that's generally the structure, right? And
Yeah.
and there can be benefits to doing that too, and it allows you to ultimately look into cost segregations and whatnot.
Yes, yes. Diving into that, that's definitely a huge piece of this. And the cost seg is, I think, very, very unique for the hospitality industry because our FF&E
Hmm.
are huge because we
Yeah, it's
have the
massive,
ability with
massive.
all of the beds, the desks, the chairs, there's so much more than the
And
typical
the structure, yeah,
business.
yeah,
Yeah.
yeah,
So talking about cost segregation, for someone who's never done it, and there's a lot, especially in the hotel industry, that have not jumped into this, don't even know what this is. What's the simplest way you can explain
yeah.
what cost seg is and why hotel owners are such a perfect candidate?
Yeah. So cost segregation. So like to the high level view of that. Let's say you're going to buy a hotel right now, right? So let's say you pay $1 million for a hotel. The IRS, when you buy real estate, they designate how long you depreciate that property over. So you buy $1 million hotel, commercial real estate, which that's what a hotel is, um, has to be depreciated over 39 years. So, meaning you take that $1 million and it gets chunked up, each year for 39 years, and you recognize a little bit of that expense of that $1 million each year. So that's what happens when you just come in, buy a hotel. You don't do a cost segregation. It's just going to set up, and you're going to get a little bit of that expense every year, right? Here's where it can be really powerful. What a cost segregation can do. So a cost segregation comes in. It looks at all the things you bought with the property, right? So you didn't just buy a structure, right? Like what Chase said there. There's desks, there's beds, there's whatever, like there's furniture and equipment inside all that, right?
Yeah.
And so what a cost seg is doing is breaking out all the components of that purchase that aren't the structure of the business, right? So or the structure of the property, right? So that all the beds, the desks, the artwork, the everything you can think of that isn't the structure of the building. And
Yes.
the cool thing is those things have much shorter depreciation lives. So they could have a 5-year depreciation life, a 7-year, or a 15-year, which is much, much shorter than 39 years, meaning just that alone would increase the yearly expenses in earlier years.
Yeah.
But it doesn't stop there. The cool thing about 5-year, 7-year, and 15-year property is it can all be bonus depreciated. And thanks to the One Big Beautiful Bill that came out a couple of months ago, 100% bonus depreciation is back starting for 2025 and moving
Yes.
for the foreseeable future right now. So meaning you can buy $1 million property, come in, do a cost segregation, break out all the components, whatever that amount ends up being can be fully expensed in year one. So let's say you
Yeah.
bought $1 million hotel. I don't know. You do a cost segregation. We do these ourselves. You, I don't know, say you come up with $400,000 worth of equipment, right? And beds and whatever, right?
Yeah.
You just created $400,000 worth of depreciation expense like that in year one.
Yes.
That can offset other types of income you have. So it can be very powerful with cost segregations. They don't have to be done in the year you purchase the property either. Like it can be done years later. The cool thing about cost segs, like they're kind of a thing that like you can keep real estate in your back pocket and decide, oh, this year I'm going to pull the lever on this one. Next year I'm going to pull the lever on
Yes.
this one. And you just have options, right? Maybe you have multiple properties. One year you sell a property, so in the same year you're going to cost seg this other one to try to offset it a little bit, right? So that's where I get excited and get in and start doing a lot of strategizing of timing all those things out and ultimately
Yeah.
helping people save money in income taxes.
Yeah. And on that note, when you decide that it makes sense to be more aggressive with the depreciation and or playing it more conservative, those are the kind of things that come to mind is when are you selling a property? When are you doing, the PIP, where you have to replace a lot of those soft items. You have to replace a lot of the beds, whatever. You could easily throw down, 100,000, 200,000 in those PIP items. Those are ways that you could be more aggressive in that year or
Yeah.
be able to
Yeah. If
push that
you have
off.
some other income, from some other thing, right? Like in timing that in the same year. Yeah, 100%.
Yes. And audit risk is always a fear factor, right? What's the line between fully taking advantage of the law and painting a target on your back, right?
That's a great question. Well, let me just tell you the reality of the IRS. Well, let me say this. In our firm, and we are very serious about compliance and everything that we do. Yes, we take advantage of the tax rules that are fully written for us, but at the same time, we're making sure there's documentation and we're checking every box that we need to check to be able to do anything, right? So a
Yep.
caveat there. We absolutely follow the rules. But with that being said, they're doing different things like cost segregations and maybe some other types of tax plays. I would say it gives you, all things being equal, there's probably some increased rate of audit. I mean, a lot of audits are pretty random. They may or may not, they're either random or you got something like that just sticks out as a sore thumb on your tax return that says audit me.
Sure.
But what I would say is like things like cost segregations and some of the other stuff that like we focus on. Cost segregations are an extremely well established tax tool. There's no question to the legitimacy of them, right? Or you know what I mean? Like they can be done wrong, and don't get me wrong, but like
Of course.
it's not like some untested tax strategy that the IRS hasn't audited, you know what I mean, a million times before, right? So
Yeah.
it's like it's played out in pretty established tax law. My philosophy on a lot of this stuff and some of these tax plays, it's like, hey, these tax opportunities are out there. And if we want to do them, we got, what boxes do we have to check so we can do them? And me, it's just open, honest conversations with the clients of like, here's what we need to do this. Are you willing to do that? Here's the pros, here's the cons. And it's really just it's just laying it all out on the table and helping the client think through, do they want to do that or not, right? And when you're talking about audits, the IRS, man, it's a disaster. Especially I think the IRS has had 9 acting commissioners in 2025, and we're in September.
Oh,
They've had
wow.
9 different leaders of the IRS since Trump was inaugurated. And most of their leadership is gone. They've laid off, I don't even know what percentage of the workforce, a lot of them. And I don't know exactly what the plan is there, what they're trying to pull off or what. I do know it's really hard to get any kind of answers or to fix any problems with the IRS. And I'm
I'm
not
sure.
sure how that is going to get better. Um,
No.
and so I don't know what audit rates will be like in the United States. If that means they'll go up, go down. I mean, I'm sure with AI and technology now, you could theoretically spot a lot more things. From the IRS perspective.
Right.
Um, but I don't know that it's even a priority either. And like I said, I say all that giving the state of the IRS, not to say that anybody can do anything they want. Absolutely not.
Of course.
But that is the reality of the situation, at least from my perspective.
Yeah. And there's some flexibility. So say you do the cost seg, you buy that $1 million hotel, you have, the potential of 400,000 in the depreciable pieces of that. You don't have to take that 400,000 year one, right? You can say, hey, I'm only really looking for 100,000 this year and spread the rest. I mean, there's different pieces that are,
Yeah, yeah. You
um,
you 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 have some level of flexibility depending on how all that money gets broke out, that 400K, and what property lives it's in.
yeah,
The years you can get somewhat strategic there. The one caveat I would say, we're getting a little technical, but like kind of that first year, you almost got to set your path in stone about like what you're going to bonus depreciate and what you aren't.
yes,
So year one is a big kind of decision point because it's kind of just like set in stone once you do that.
yep.
But yeah, you definitely do have some flexibility. It's not like you have to take all that 400. Yeah, for
Yeah,
sure.
yeah. And there again, that leads to the importance of having a good financial planner, good tax planner in your pocket to make sure that you're doing it right.
Yeah. Yeah, yeah, and because when I'm looking at say Chase, I was consulting with you on that very situation. I'd be talking about, okay, well, do you need the 400K now? What kind of income are you expecting next year or the year after that? And so we're really, you know what I mean. We're talking about the future and just trying to decide how and when do you want to recognize that expense, right?
Yeah. Peyton, do you get into the topic of debt with your clients a lot? So many hotel owners I know are wrestling with the debt question. How much do they take out? What's a too much leverage versus a healthy leverage?
Yeah, yeah, and that's a great question. Yeah.
Yes.
Debt obviously can make things speed along, right? Debt on paper, you do all the math and crunch, like you should theoretically leverage to the hilt, but we understand like
Right.
that's not how the world works, right? Like things
Yeah.
don't just grow up and to the right in a perfect, in a perfect form, right? So
Yes.
it's a lot of it is a matter of personal risk tolerance. Once again, it goes back to when you're coming in and buying a hotel, right? Like I want to look at everything like as conservatively as possible, right? Like, okay, say the hotel doesn't perform well and whatnot. Can I still cover my debt load, right? And really,
Yeah.
like me, I like to come into a situation and look at like worst case scenario and be like, oh, am I okay with that, right? Am I okay with a worst case scenario and still like purchasing the property, right?
Yeah.
Um, so that's a dangerous thing. What I think was it Charlie Munger that says, I can't remember. It's like 3 things that men destroy their lives with. It's liquor, ladies, and leverage.
Yes.
And leverage is probably the biggest one. And
Right.
I've seen it. I've seen it in plenty of businesses where people have just blown themselves up with it.
Yeah.
Um, so it's just coming into it with your eyes wide open. I think where people get themselves in trouble is they don't understand the cat. You need to know the cash you need to generate to service that note, because if you can't service that note, well, the whole game stops. So
Right.
it's coming in eyes wide open, knowing the cash you need to generate, and making sure the asset can generate that cash, or you have some way to make sure it's covered. Because yeah, the last thing you ever want to be, where leverage gets you in trouble, is you get in over your head and then you become a forced seller, right? And then you become a forced
Exactly.
seller, and you're gonna be in a really bad position, financially, and probably moving backwards.
And luckily, I mean, we're in a situation right now with, I mean, commercial real estate in general. Hotels
It's not like
haven't hit
owning a
the
100-story office building
fan.
somewhere, right?
Yes, exactly. Yeah, yeah. There's always a market for the
Yeah,
hotel side, but um, you do get into that issue when the interest rates were really low. Yes, obviously the idea is leverage to the hill. Like you're going to
yeah.
make
Well, and
so
and
much
so
more
many people
money.
did that in 2021. It was like,
Yeah,
give me all the money I can have for my property. I'm going to get this lower, maybe more teaser type rate, right? I mean, because
right.
it's an adjustable rate. And the problem is, everybody could, in 2020, like say in 2021, everybody could grab as much debt, they're freely just handing it out everywhere. The problem is, you hit 2022 and moving forward is like, what if the asset can't actually support that? And that's where you
Yes.
see like, I'm not that far from St. Louis. And I don't know how many stories I've seen of like, 50-story office
Yeah.
buildings that sold for $90 million in 2021 and sold for $3 million last year.
Yeah.
Like a 95% drop in value, right? And
Yes.
that obviously hotels are not that, not the same asset class there, but it still holds the same. If you have an asset that ultimately can't produce and to pay the note, it's going to be a problem.
Yeah, yeah. And one of the justifications that I heard a lot, and this always kind of worried me, is that at buying, yeah, that 20, 21, 22 time period where you could get at a much lower interest rate, is you think, well, that's fine. Even if interest rates do jump up in the future, it's fine because I'm going to build in that I'm going to have some appreciation. I'm going to have the debt pay down. So even if interest rates jump, refinance, increase the debt amount, and everything stays the same. But that doesn't always happen with the one main factor that interest rates, while they don't drastically, in some cases, affect the value of the properties, it does have an effect. So when interest rates are lower, the cash flow is higher, which means a lot of investors are willing to pay more for a property. When those interest rates jump up, the value of the property plateaus, goes down, doesn't go
Yeah,
up
it's
as
going to have an
fast.
inverse relationship. Yeah, yeah,
Yeah,
100%.
yeah.
Yeah, yeah. Well,
And
I mean,
then,
you think about it, like any asset that's like generally bought with debt, right? Like that's all real estate.
yes,
All things being equal, now there's more than one variable, but like all things being
yeah,
equal, interest rates go up, real estate's going to go down, right? Like, and
yes,
interest rates go down, real estate's going to go up because like if just interest rates go down, well, I can buy more, right? For the same cost.
yep,
So that is, obviously there's more than one variable, but yeah, they're definitely inverse relationships. Yeah.
yeah, absolutely. Talking about like exit and some long term planning, depreciation recapture,
Yeah.
the dirty surprise that many owners realize at sale. Some know it's coming, understand the big picture of what it is. Some don't. They just see, hey, I get a huge loss off of this property. It's good for my taxes this year,
Hmm.
and but don't really understand what's going to happen in the future. What
Yeah.
should hotel owners be doing now to prepare for that?
Yeah, you just need to understand it, right? Like, so when we were talking about cost segregations earlier, it's not like cost segregations create additional expense. It just pulls it forward, like it pulls it into the
Yeah,
current year, right? Like we're taking expense from future years and bringing it into now, right? Because we're doing, whether time value money or or you had a big income year, so we're trying to stay in certain income tax brackets, and there can be a lot of value there, for sure. Um,
yep,
yeah, the backside of that is okay. You've depreciated out this property, a lot, and then when you go to sell it, you ultimately have depreciation recapture. So let's just quick math. You bought this $1 million property, said you've owned it forever, and you depreciated it all the way down to zero. Well, when you sell this property, like you sell it for $1, like you have income because your basis in the property is zero. Uh,
yes,
so any dollar you get for it is all income. It's not just anything over $1 million is income, right? It's all of it, and so yeah, there's a lot of strategic planning there. There is depreciation recapture, but there's also, I mean, there's also you can either 1031 real estate, or also you can maybe take
Yeah.
that money and place it into some other type of tax deductible thing to offset that.
Right.
So there's options. It's really just a planning piece. But yeah, you're not just going to walk away from that property and hold on to all your money and not reinvest it into something and not have a big tax bill. That's just the reality of the thing. The one caveat though is the awesome thing with real estate. If you strip all your bases out and you have no basis in it. If you die with it, and somebody inherits it, they actually get a step up in basis and they can sell it for no taxes. So
Yes.
so that's the one best way to pass on real estate, honestly, is upon your death, which
Right.
isn't much
Right.
fun for us, though.
But that's also sort of a built-in, and openly speaking, that's one of uh, our main ways that we're looking at generationally down the road. How do I pass on some opportunity to my kids, grandkids,
You know,
is in the real estate that I want to hold on to?
yeah, and so me looking at this from a tax planning perspective, so having conversations with clients, and they're like, "Hey, I'm going to own this piece of real estate forever." You know what I mean? And my kids are going to take it, and I'm going to die with it, right? Or that's the plan, right? Why wouldn't you cost segregate it? Like, why wouldn't you pull all the bases out of it and recognize it? Because it's going to get reset upon your death anyway, right? So you can
Exactly.
take advantage of it while you're alive, and then ultimately your kids or whoever, um, it doesn't affect them at all.
If you were to give hotel owners one piece of advice to make their financial life easier tomorrow, what would it be?
Get clean, consistent financials so you can make business decisions and planning decisions.
Yes.
Um, and work with a professional that is proactive, one that's on your team, and one that is looking to be a partner with you, right? Like walk alongside you in the journey. So find great financial professionals that are willing to do that. And you just got to get clean line aside. I mean, with everything, it's just intentionality around it. Being intentional about it and start putting in different processes, and over time, you'll your numbers and stuff won't scare you anymore.
Yeah.
But in the beginning, they're going to scare you until you actually start dealing. If you haven't looked at them in a while, it's probably because you don't want to, right? and but as soon as you start doing that, it gets a lot less scary, and then you can actually do something about it too.
Yeah. Yeah. Absolutely. All right. Before we check out, you got to have the wake up call.
Okay.
What's one book, podcast, or resource that you think every hotel owner should check out?
Man, that's great. I'm so much of a reader and podcast listener, and it like me, it's really hard to give like one answer. Um, the one which is a terrible answer, but um, I would suggest something that I've been really into this year is any of the books by Dan Sullivan or Dr. Benjamin Hardy. So these are the people that wrote Who Not How,
Yeah.
um, Willpower Doesn't Work, 10x is easier than 2x. They're just amazing entrepreneur content of how to think through business, how to scale business, and really just generally how to think about business and running your own business. So that I would encourage anybody to check out any of their work. They have amazing work, several books, and of course, like just go to YouTube and search Dan Sullivan and Ben Hardy, and watch some of their content. You'll definitely learn something that'll help your business out.
Yeah. Absolutely. Those are huge. If you weren't doing accounting or financial planning, what career do you think you'd be in today?
Some kind of media, I guess, or I where my skills at, and I think where I've really succeeded is in my communication ability, right? Like we're really good at what we do, but I'm also really good at communicating it to the clients in a way they understand and are comfortable. So I don't know, I wanted to play in the NBA, but I didn't get as tall as you, Chase, so I couldn't.
That's all
But
right. I
so
was
I don't
given the
know, playing
height,
some
but I
basketball,
wasn't.
sports. I love sports.
Yeah.
That or just kind of communications, media kind of stuff.
Yeah. Awesome. What would you say is the most underrated skill of hotel owners or business owners in general that they can learn outside of running their business?
Underrated skill. For me, or I think in business in general, if you want to win, it's being able to delay gratification. and that cuts across all business, all finance stuff. The people that win are the people that are able to work at something for a really long time without seeing the results. Especially in today's world, we're all chasing dopamine hits and distractions and everything all the time and immediate gratification. That no one could sit down and work on something for like an hour straight without stopping, without getting distracted. And it's such a superpower in today's world to be able to do that, to be able to, think about it. You're working on your business, or you think about it this way: you go to the gym, and like the first day you go to the gym, you come home, you don't see anything, right? No results.
Right.
For a week, you still don't see any results, right? And that's why
Yep.
everybody quits, because they don't see the results. The people that are successful are the ones that keep doing the doing without seeing the results yet, because they have the faith to keep going, knowing that I'm doing the right things. It will eventually show up.
Yeah, absolutely. It takes time. Entrepreneurship business is not easy. It is not quick. It takes decades, and at least in my case, maybe I'm not as
Well, yeah,
smart.
maybe we're not the smartest people in the world, and I can even look back at my journey and say, hey, I could have done this way faster. But at the same time,
Yeah,
like it's all about the journey, and yeah, you're right. Like it's hard. You get punched in the face over and over again, but that is, I mean, it is what it is.
what's a coffee order of choice? Are you a coffee drinker?
I am, yeah. I'm a
Okay,
double Americano guy, just a hot espresso over water. That's
okay,
me.
all
I'm
right.
pretty plain. I did go to Brazil a week ago, and we visited their whole coffee area where all their coffee comes out, and I had
Oh,
some
nice.
amazing coffee down there.
Nice, nice. My wife Liz, she was huge on Americanos during second to last pregnancy. Huge, almost every day. Not actually, but would that was like her one thing that she would choose. Since then, no, can't stand them. I don't
Oh,
understand.
my wife just gets 3 espressos over ice, so she's even more hardcore than me.
Nice. All right, last one. What's the best piece of advice you've ever received that still sticks with you today?
It's just, a lot of my mentors are through books and podcasts and YouTube videos and whatnot. Charlie Munger is a huge hero of mine in the finance world. He's a right hand guy, Warren Buffett.
Hmm.
He has so much great advice, wisdom just out the world. But here's the advice: what separates winners and losers are like the smallest things. Um, it's leaning into pain, or what you perceive as pain. Because like if you're running a business and the business is dying, you're in pain, right? If you're running a business and the business is staying flat, you're in pain. You don't like it. Okay. And if you're running the business and
Yes.
it's growing, well, you're in pain because you're breaking stuff. So, like, what I think
Yeah.
the overarching point there is like, you're in pain no matter what. So you might as well be trying to grow it, right? And so that's we like to trick ourselves into thinking there's some other easier path, but you just need to choose your heart and lean into it.
Yeah. Yep. Hard is not always bad.
No, no, not at all. And I try to remind myself every day that like anytime I'm experiencing hard, that's what's going to separate me from everybody else. Because the more hard I experience and willing to take on, I know that there's less and less people that are even willing to do that.
Yeah. Yeah. Awesome. Paden, thank you so much for joining us today. You've given a lot of wisdom. Paden, I know we're going to see you soon.
Yeah,
You have
heck
a
yeah,
good one. I
yeah,
appreciate you.
yeah. Absolutely, Chase. Appreciate you, man.